Hi there. We've seen accounting for the acquisition of PP&E assets and recording the depreciation so far. The last topic left is disposal or sales of PP&E assets. Okay, I think this topic is best learned through an example. The key here is you should always consider count in accumulate depreciation when you sell the PP&E assets. That is, always accumulated depreciation is attached to PP&E, right? Again, you buy a laptop at $1,000 and then 2 years have passed, then you believe that the value of your laptop is like only $300, not $1,000, right? So when you sell the laptop, then it is, from your viewpoint, sales of like around, not exactly, but around $300 value asset, not the original $1,000 value asset, right? That is, when you sell, you are considering both of the historical acquisition cost, which is $1,000, and its accumulated depreciation so far, which is $700. So when you sell the laptop, you should credit the laptop, which is $1,000, and then debit the accumulated depreciation, which is $700, right? Again, you thought that you will get $300. But at the Craigslist, you are lucky, yay, you received cash of $500. Cool. Then what do? You also debit cash $500. Again, what's the setting? You thought you will receive $300, which is the book value of your asset. But you received $500, which is a cool surprise. That cool surprise is called gains in accounting. Unexpected cash inflow. Not cash inflow, but unexpected valuation differences. Okay. If it is not so much happy situation, like you received only $100, you should debit loss. Okay, what are we talking about? Let's have a look at this example, exercise 10.10. Price company owns equipment that cost $65,000 when purchased on January 1st, 2017. It has been depreciated using straight line method based on estimated salvage value of $5,000 and on estimated useful life of 5 years. So yeah, easy straight line method will be applied. Prepare price company's journal entries to record the sales of the equipment. In these 4 independent situations, sold for $31,000 on January 1st, 2020, May 1st, 2020, the same. Sold for $11,000 on January 1st, 2020, the same value on the same price on October 1st, 2020. Okay. First, let's talk about this asset and its accumulated depreciation as of January 1st. Okay, so its acquisition cost or book value. At the purchase is $65K. With salvage value at the end of useful life $5K. Therefore, you should depreciate total $6K over 5 years. That gives you annual depreciation per year, which can be converted as 1K per month, right? On the straight line method. Okay, cool. Then, as of January 1st of 2020, by the way, the acquisition was January 1st of 2017, right? So between January 1st of 2017 and January 1st of 2020, how many years have been passed? 17, 18, 19. 3 years have been passed. Therefore, over the 3 years, you have accumulated depreciation over the 3 years, and per year 12K. So accumulated depreciation must be 36K, right? And then your journal entry must be, again, you are giving up your equipment. And I told you that always accumulated depreciation is the string attached to the equipment. Again, and accumulated depreciation, its normal balance is credit side, which is the other side of your equipment. So when you sell your equipment, the equipment should be credited. And it is valued based on its acquisition cost, which is 65K. But I told you that always accumulated depreciation is attached, so it should be recorded together with equipment, where the other side of the equipment, therefore it should be debit side. How much? We've seen that as of January 1st, it is 36. Cool. Meaning the book value of its asset is, the asset is $65K minus 36K, which is 29K is the book value, right? But how much did you receive? 31. Cool. We've received cash, 31. Then, is it a nice surprise or unpleasant surprise? Again, it's a nice surprise, which is called in accounting gains. Okay. Then, should he record the gain on the debit side or credit side? Debit side total 67. Credit side total 65. So we should credit 2K, and it's called gains. Gains and losses. Okay. Let's do the same thing. Now on the B, it's May 1st. Then on this date, May 1st, how much is your accumulated depreciation? First of all, over the 3 years, 36K. And then how many extra months? January, February, March, and April. 4 months. Right? Again, this is for the 3 years, and this is for the extra 4 months. Okay? Giving you how much? 40K. When we give up equipment, 65K. Cash, how much did you receive? 31. Then, how much is your debit total? 71. How much is your credit total? 65. How much should you add on which side? 6 here, which is labeled as gains. We can use the same approach as A, your book value calculated is 65 minus 40, which is 25K. You thought that you will receive 25K, but you received 31. How much are you happy? 6K much, you are happy. That's called gains. Okay. Okay, let's move on. C, the same accumulated depreciation. And equipment, 65. And as of January 1st, the date is the same as A. So we can use the accumulated depreciation of A for the question C. How much was it? 36K, right? 36K. And we know that our book value is 29 also. But how much did we receive? 11? Oh my. How much are you unhappy? We are unhappy by 29 minus 11 by 18. That should be added on your debit side, right? So that the sum of the three numbers, 18 plus 11, which is 29, 29 plus 36, which is 65. Debit total equals the credit total. And this unpleasant surprise is in accounting called losses. Gains and losses, gains or losses, G&L. Okay. D, the same. Accumulated depreciation and equipment, 65K. And now it is October 1st. So your accumulated depreciation must be sum of 3 years, 36K, plus 9 months, 9K. Again, your accumulated depreciation over the first 3 years and the extra 9 months becomes 45K, meaning your book value of the asset is 65K minus 45K, which is 20K. And how much did you receive? 11? Oh man. How much are you unhappy? The difference between 20 and 11, which is 9K unhappy. We are losses. Again, the sum of 11 plus 45 plus 9 is 65, so we are good. All right. Okay, this is the end of PP&E. We will move on to the natural resources and intangible assets in the next video or videos. All right, and see you there.